Looking at it now, I would assume it was a reversal anywhere up there. This wouldn't have been a bad entry right there for a quick scalp, definitely for not for a trend continuation. And to the long, you took it 1337 after test of view up. Are you still in it? So you took it to the long side here, right? But then it dropped more. Didn't you get stopped out? What was your stop loss when you took it to the long side? Hey, Anne. I'm looking at it now, I would assume it was a reversal anywhere up there. This wouldn't. Took SPXL for a parabolic reversal. Is that when you took it? INO? You took it at 9:56. I took it a little bit earlier, INO. SPY, the trade I've taken, it was early. It was right at the open. It was a short trade. And why did I take it here to the short side? Look at the pre-market. Dropped down, pulled back, held the 20 moving average on the 5-minute chart. At the open, it did break this area right here. You see this area which it held? 278.90, somewhere around here. Once it broke it, I took it to the short side, put my stop loss at a new 1-minute high, but unfortunately it got me stopped out. SPXL, I didn't take it. 9:56. I'm not sure I would have taken. So yeah, let's start our trade review, and if we have time, we'll take a look at some trades together. Okay, see, 15-cent stop loss. Yeah, I see. Okay, yeah, that's not bad. I personally would have been stopped out because you never know how far it's going to go. We took it. This setup, if you took it to the long side, it was for a retest of view up, right? Or a view up bounce. So basically, that setup failed since it broke view up. And since it broke it, I would have been stopped out. If it came back up or did another setup, this looks like a good entry right there. If it did that after, I might have re-entered, but I usually don't put my stop loss below technical level. Or below the level it bounced off. Yeah, exactly, Denise. That's good. So let's see what we have there. Avi and then Valentin, and then I'll go through my trade on INO. I mean, that'll be later, I think. But yeah. So Avi traded WFC. You took this one to the long side. This is a 3-bar setup. Not exactly a 3-bar setup. Let me get the Epic pen. Again, I'm doing something stupid. So let me show you the 3-bar setup. This is similar to 3-bar setup, but unfortunately it's doing a 4th-bar. What's 3-bar setup? A long bullish candle. Then you're having a doji or a small candle or whatever. Then the next candle breaking up. That's 3-bar setup where you take it to the long side here and put your stop loss down here. This is one of the occasions where I might take it. I don't really trade this setup a lot, where I might take it to the long side when it is extended from the 9 moving average on the 5-minute chart. Because if it fails with this and it goes to the downside, then it forms another setup which people go for. They take it to the short side once it breaks the doji, and the target is the low of the previous candle. Here it's not exactly 3-bar setup. By this time it was a 3-bar setup. Going up a doji, and then it's doing a new high where it would have been a possible good entry. You waited a little bit more for confirmation, then you took it to the long side right there. I could see why you waited there. You waited for the break of this consolidation right here. It did break it. You took it to the long side at this area, at this breakout. I personally would have put my stop loss at a new 1-minute low. Why is that? Because you are getting in here on the 1-minute chart at the breakout area. If you got in anywhere right there in the middle, stop loss would have definitely been the low of the consolidation. But since it was a breakout, my stop loss would have been just a new 1-minute low, and you held well onto this one. On the 1-minute chart or on the 5-minute chart? Yeah, the 3-bar step is here on the 5-minute chart. That 1, 2, 3, and you could take it on any time frame. Like, remember, setups, they are not just being played on one time frame. You could take that step on the 1-minute chart, on the 5-minute chart, on the 15-minute chart. Earlier on the day, it could be on the 1-minute chart. Later on the day, around this time, it could be the 5-minute chart bit more later. I will not take it to the 5-minute chart. I'll just wait for 15-minute chart setup. Okay, so Valentine, let's see what you did there. Traded ALLO. You took this one to the long side. So this I would have been a little bit cautious about. I wouldn't really have taken it to the long side. Why is that? The pre-market doesn't have any clear direction right there. It was bullish at the open. It wasn't even strong at the open. First of all, you have this selling pressure wick right here, right? Then it's forming a hammer. Then it's doing a selling pressure wick again. Then it's coming back up, and it's so close to the high of the day. Even the risk to reward isn't there. And look, you put your stop loss down here, right? So this is the risk, and this is a possible bounce. It wouldn't even give you half of the move for the reward. If this was your target here, then yes, it will give you a 2-to-1, and this is a good risk to reward. But it's better to wait, get a better entry, so that this move right here gives you a 4R, 5R, or a bigger move there. This is just not worth taking this setup, in my opinion. Panicked on that one, was thinking short squeeze with a high short float. Yeah, I see that. So one of the things I'm not doing is, let's say there is a downtrend there, okay? Then at the low of the day, you are having sort of a hammer. Then it's doing a pullback, and then it's making a new low right here and right here. These setups I'm not usually taking to the short side. I'm not taking these setups for reverse ABCD patterns because of this right here, reversal candle, and usually they do a higher low and then they bounce and go to the long side. And I don't do the same thing when I see the other way around, the shooting star at the high of the day, a pullback, and I wouldn't take this thing to the long side as an ABCD pattern because they usually do lower high and then drop down. So that wouldn't have been the perfect setup, and because of this I definitely wouldn't have taken this thing to the long side here. Plus the entry was a little bit late, right? If you would have wanted to take it to the long side for an ABCD pattern, this would have been the entry right here. This was already a chase. It did the first long candle, second, third, which are huge candles right there, right? The risk to reward is messed up. It's a little bit late to enter. There is a strong resistance above you that I would have avoided. This entry here is amazing. I love it. Why is that? You don't do anything here. You are not sure what's going to happen right there. It could be a parabolic reversal since it's so extended from the 9-moving average on the 5-minute chart. On the 5-minute chart, you see some buying pressure right here. The 5-minute chart, yes, it's closed red, but it has a wick which shows you that it wasn't weak enough to close down there. It just got bought back up a little bit. It's around the daily level, increasing volume closer to the low of the day area. So this is not the worst setup to take it to the long side, but still not so ready as well, right? Going up, pulling back, and look at this. Here it was forming lower low and lower high waves. You could see that this sort of channel right there, this is it right there, right? It's making, this is the high, the low. High 1, low 1. High 2, low 2. High 3, low 3, right? And then right here, it just breaks the trend. It's not forming any more lower highs and lower lows. This is the high 4, low 4, you see? It was downtrending right there. Now it changed the trend. So this is not the perfect place to take to the long side for a reversal, but it could go for a parabolic reversal. It's not ready yet, but you could take this thing for a scalp. Right here, it gets much more clear. It's going up, it's pulling back, it's forming a higher low and a higher high wave. It broke this downtrend right there. This new high isn't a bad place to try and take it to the long side. If you miss this is the first leg up, the first ABCD pattern. You could wait for the second leg up, second ABCD pattern right here. See, that's it right here. Took it as close as possible to the support. You have confirmation candles on smaller time frames. You have a setup on a bigger time frame, and that was your entry right there. So this was amazing. I like the patience, how you waited for the entry. You didn't chase it, similar to what happened here. You didn't take it when it wasn't ready right here, or maybe here for a chase. You waited for a good entry. You got the good entry, and you got a nice uptrend on it. This was an ascending triangle right here, a breakout setup. It was at the pre-market high level right there. It was at the high of the day as well. Formed an ascending triangle. 1, 2, 3 touches. 1, 2, 3 touches. Went in for the breakout. Stop loss new 1 minute low. Got your reward and exited the rest at break even. So I love this trade and this trade. They were amazing. This was just, you said it was a little bit late. How to trail stops on the way up. So on the way up, look at this. You see this level you marked right here? If I have this level, this is the breakout area. The stock here does break the high of the day. Right here, it does break the high of the day. And remember what we usually say? If the stock is breaking the high of the day, it either shoots up, or if it's not strong enough, it could pull back, retest the previous resistance. The previous resistance becomes support, bounces out of it, and continue going higher. So my stop loss right after the breakout, I could take some partials there, but on this drop right here, I will not bail on the trade. I will still be long. Why is that? Because I know that the stock, when it's breaking up, it usually comes back to retest the previous resistance. Here it wasn't that weak. It didn't even retest the previous resistance. It just bounced a little bit above that. But as long as it's above the previous resistance right here, I'm still going to be long on it. If it breaks and goes back down into the range, this is a weak sign. It's not so strong. I will just bail on it. But as long as it's above the previous resistance, I'm going to hold on to it. And actually, if it holds and starts making new highs, look at this. This is your entry, right? This is your average now. Now it is bouncing out of this level. And I know that if it drops back down here and gets back into the range, I'll bail on the trade. So there is no reason to have your average down here. There is no reason to hold into break even. You could double the remaining of your position right here, and your average will be somewhere around here, which is not bad, right? You had, let's say, 20% of your remaining, you double it, and you have 40% of the original position with a new stop loss. If it gets you stopped out, you don't lose anything. You lose only the unrealized money, and that's totally fine. And if it works out and continues uptrending, you'll have way bigger profit. How do you enter on 5-minute pullback on the 1-minute chart? Like, similar to what Valentine did here. You see where he got into his trade on the 5-minute chart? His entry here was when, okay, it got bigger, that's good. You see his entry right here? The price opened here. When Valentine entered on the 5-minute chart, this candle was fully red. It didn't look so good, right? So he entered on a pullback on the 5-minute chart. But when this was red, did he take his entry right here because of the 5-minute chart? I mean, looking at this, if I saw that this candle is red, 100%, I will not take it to the long side only because it's pulling back on the 5-minute chart. And I bet Valentine didn't take it based on the 5-minute chart. He saw the setup on the 5-minute chart, then he took a look on the 1-minute chart. And look what we have in the 1-minute chart. We had selling pressure candles right there. It did break this area right here. It was a fake breakdown, made a hammer, a doji, and a new high. So on the 5-minute chart, it looked red by that moment, but you could still see bullish pattern on the 5-minute chart. It broke the area, it started making higher highs and higher lows. It is red on the 5-minute chart, but that's the point. We see a setup on the 5-minute chart, and we try to get a good entry on the 1-minute chart instead of waiting for a new 5-minute high and getting an entry right here with a way far stop loss. If you get in an entry right here, that should be your stop loss. You can't just put your stop loss at a new 1-minute low. You look at the pattern on the 5-minute chart, look for a good entry on the 1-minute chart, and that will give you a good reward if the setup works out. You are welcome, and good trades, by the way. So these trades, they were for Kyle. Yeah, Kyle, let's see what you did there. You traded DAL, you took it 2 times to the short side, and both of them were good. I like both of your trades. First of all, look at these guys. You're having sort of a descending triangle on the 1-minute chart. And look at this, 1, 2, 3, 4, 5, right? This is a 5-minute candle right here. This right here, this is yeah, right here. This is a 5-minute candle. These are the wicks of the 5-minute candle. Now you're having a 5-minute open range breakdown with a descending triangle on the 1-minute chart. This is one of my favorite setups. When I see a small pattern on the 1-minute chart with a bigger pattern with a setup on the 5-minute chart. That's a descending triangle on the 1-minute chart, and Valentine said it. 5-minute open range break down and a descending triangle. This was perfect. It broke it. You take it to the short side right at the breakout. In this case, I would put my stop loss either somewhere right here or somewhere right here, because this is already a breakout area. Took some partial at the daily level. Unfortunately, it didn't work so good and it started coming back up, which is why he exited break even. This was a really good trade right here. Then it's pulling back. It's making a new 5-minute high. It did an engulfing candle on the 2-minute chart. Broke the high of the day by that moment, but it wasn't strong enough. After breaking the high of the day, it immediately got sold back down right there, closed as a reverse hammer, and did a new 1-minute low, which is why Kyle took it to the long side. And what was your stop loss when you took it to the short side? Was it the high of the wick, or the high of the body, or you just gave it some room right there? If I take this setup to the short side, my stop loss would be just... Usually it's above the body, but the body in this case is so small, I would put it maybe a couple of cents above the body. That would be my stop loss. But let's see what Kyle did there. There was a moving average above that, and that was your stop loss. Let's zoom it in a little bit. I see this. This was your stop loss. This was good. Yeah, that's exactly it. This would have been a really good stop loss. Then you partialed all the way down. One thing I would have done, I mean, this partial, if it gave you the 2 Rs, not bad. I would have done that. I mean, if I'm nervous, if I'm not at my goal, or if the setup is not so clear, I had a really tight stop loss and it gave me 2 Rs, it's not bad. I mean, you could take partials there. This could have been only one partial. This partial is still not bad. You took a partial at the low of the day. But this partial here, the setup started working. It broke the low of the day. And once it got into the low of the day, there is no reason to partial right there. Because if it gets here and it breaks it, all the longs are going to get stopped out and it's going to flash at least a little bit more. So you got a really good entry on a really good setup right there. And you had your Rs even before it broke the low of the day. So you could have just left at least a little bit for the break of the low of the day, because the setup is a breakout setup, and if it works out, it could work out really nicely with similar to what happened right there. And you are not only mistaken with that. I'm just saying that to you as a reminder. I will show you something there. I also did the same mistake right there. I took INO to the short side and I traded my PNL. So this is a reminder to you, and it's also a reminder to me. So why did I take INO to the short side? On the daily, so extended from the 9-moving average in the 5-minute chart. And remember guys, when I'm trading the daily chart, the 5-minute chart, the 1-minute chart, I mean whatever time frame I'm trading, I just apply my setups based on that. I see a setup on the daily chart right here. Back then, if you remember on that trade review or in the chat room when I was in the microphone, I took INO to the long side here and here because it was close to the 9-moving average on the daily. It did sort of an ABCD pattern on the daily chart. So based on the daily, I was long biased and I was waiting for INO for long setups. Today, looking at it, I saw that it was way extended from the 9-moving average on the daily chart. At the open, it did a huge move right there. And look, what is that here? Something I love to see when I'm taking parabolic reversals. And it's something we saw on Uber when we took the reversal yesterday on climactic volume, way increasing volume at the high of the day. And sometimes you could say this was a huge candle right here, and that's why the volume was big. It could be, but look at this. This is also a huge candle right here, but the volume is not so big. This is a huge candle right here. This is a huge candle. This is the first candle at the open, but still it's not so huge. That's why I love seeing climactic volumes before the reversals. It's showing you that there are a lot of buyers in there, and there are also a lot of sellers in there. Some trying to push the price higher, some trying to push the price lower. And since there is a lot of fight right there, I would assume that one of the two would win, and then I could just base my trade on. I'm short biased. I'm not taking this thing to the long side if the buyers win. I want to see what's going to happen after. And I see those selling wicks. And right here, finally, I saw this shooting star at the high of the day doji on the 2-minute chart, new 2-minute low, took it to the short side so that it pulled back, didn't even make a new 1-minute high. I assume that this is the breakout area, added to my position, and then partial all the way down. But what's my mistake here? I went into a really good setup. I was really short biased, and I know I expected it to drop way more than that, but I decided to just exit all out 1366 because I hit my goal. Did you take half size and add another half size? No, this was double size. At the beginning I took it to the short side here, and my stop loss was up here at 1405. After that, once I saw that it started working out, I added to my position at 14 and put my stop loss just at 1402. So this was double size right here. I moved my stop loss a little bit. If I lost, I would have lost 1.5 R instead of 1 R, but I was pretty confident on it, and it doesn't mean that I was 100% sure it was going to work out, but I was willing to risk half R more on a good setup. So yeah, my mistake here is that I've taken 3 partials here. It was supposed to be only 1 partial, hold the rest to the daily level, hold a little bit to the previous day close, and then just leave 20% to run. So I mismanaged this trade here. Now let's see what Arthur did. Arthur, early partials again, and what do you think about the second trade that I didn't take? I wasn't fully confident on the trade, so I started to fear to lose profits, and I ended up not taking the trade. Can you please review this picture? Are they related? Okay, let's check this picture instead of that one. So this is Arthur trade. He traded AMD to the short side, and I love that you traded it to the short side around here and not to the long side. Why is that? Look at this candle here, guys. This is a huge move right there. It's around $1 move on AMD, and when I see that AMD making a move to the upside with no pullbacks around $1, $1.50, 80 cents, even 70 cents, I'm not taking it for a trend continuation, even if it does a setup on the 1-minute chart. I see that it's extended, and I'm waiting for a setup to the short side. On AMD here, you took it to the short side. Now this is just a little bit early for me. I'm not sure I would have taken it before the new 2-minute low, unless there was something you saw on the level 2. So what was the reason you took it to the short side there? Was it only because it hit the daily level right there, or you had other reasons? I can't see the volume bars there on the 2-minute chart. Oh, I see them. They're actually up there. The level 2. Okay. So look at these guys. AMD on the volume bar, I can see no confirmations for a parabolic reversal. There is no climactic volume. The volume is just decent. All the candles, I'm a small difference, but there is nothing significant to see from the volume right there. You had a daily level on the way which it broke, fake breakout, and then it immediately started selling off. So this is a good confirmation right there. He saw something on the level 2, and what would I love to see on the level 2 for these type of reversals is a wall. I want to see a wall. I want to see the stock rejecting that wall. Huge ask. I mean, exactly, that's it. So if there is a huge wall above me, I would expect that the stock will first bounce out of that huge ask before getting some more power to break it. So he saw a fake breakout, extended stock, a huge ask as a wall, took it to the short side. That was an amazing setup, really good stop loss right there, and then partialed all the way down there. I wish I saw that, Arthur. I would have definitely shot it if I saw that huge ask up there. Now let's see what you see right there. So look at these guys. This is the high one, right? This is the low one. This is the high 2. This is low 2. So by this moment, it's making lower lows and lower highs, lower low and lower high. You could, higher low. So it's starting to form sort of pennant. By this moment right here, you could take it to either to the long side or to the short side. I mean, definitely not to the short side here. To the short side here, you could take it somewhere around there. Because this is already a huge move and you need to take it for a pullback. To the long side, this is not bad. Why is that? You could trade the range. You could draw sort of pennant and you could see that it's still so far from getting tighter or for a breakout area. It could definitely break down, but if you want to trade the chop, if you want to get into the long side somewhere when the setup is not ready, at least you should do that as close as possible to the support. You either long it here or you either short it down here for the breakdown as close as possible to the resistance. Taking it to the long side somewhere around here, I'm not sure I would have done that. Around here I might have considered that. Why is that? Because it's still forming a pennant. You see that? It's going up, it's pulling back, it's just getting tighter in range. It could just simply drop down. Would I take it to the short, to the long side here? Still not really, because this is still a lower high, lower high, lower high. But then once you see that it's forming a pennant and now it's starting to slowly uptrend on the 2-minute chart right there, I would be interested in taking it to the long side somewhere right there. But still, even then, it will not be so clear. Looking at the 5-minute chart, it's just making higher highs and higher lows, higher high and higher low, higher high and higher low. It's just uptrending right there. So I'm not sure I would have taken this setup right there to the long side. Even though it looked well on the 2-minute chart, it's not looking so good on the 5-minute chart. The short was good. The long, I would have waited for it to just do another pullback, which it didn't do. I would have just simply missed the move right there. Actually, yeah, on the 15-minute chart, it's not bad. Looking at this wick right here, dropping down, coming back up, breaking the buys right there, taking it to the long side there, and putting the stop loss somewhere in the middle of the range for the breakout. So yeah, at the 15-minute chart was good. 2-minute chart is good. The 5-minute chart isn't the best. Not the best setup, of course, but still not the worst. The short, though, I love it. You see this? At the high of the day, broke the high of the day, but after it broke the high of the day, it wasn't so strong to continue going up. And look what happened. At the pullback, it did break this high, got back into the range. The previous resistance, the second level or the second level pivot point, held, started coming back up, couldn't get into the high of the day, selling pressure again. Now, taking it to the short side anywhere there would have been really good. So yeah, this would have been a good short. This is a good short. Not the best long, but still decent long right there. Charles, what did you do there? Have a good day, Arthur. Thank you. WFC, you took it to the long side right there. This is not bad for a 10-minute open range breakout. The problem is the price action isn't so clear. I still like your long right here. I think the entry was a little bit late. If I have taken the long right here once it broke this area, it should have been a little bit better to have just a tighter stop loss. But I think the pop was fast. That's why you got a late fill right there. The 2-minute chart still looks good. You have sort of hammer right there. 10-minute open range breakout on the 5-minute chart, close to view up. So yeah, this was good. It was decent. And partial right there and exit the rest at break even. So yeah, this wasn't a bad step. It was really good. You saw an uptrend on the 2-minute chart, an uptrend on the 1-minute chart, uptrend on the 5-minute chart, close to view up. It did the pullback. Everything was there. I'm trading buddies with Charles and he had to go. He said his entry was late. Do you agree? Yeah, we said that. The entry was a little bit late. If he got in at least right here, right at the breakout, that would have been perfect. I know this is just, what, around 7 cents, right? But 7 cents, it does matter. Why is that? 7 cents later entry means that your 2 hours will be 14 cents later. So look at this. And I'll show you just in terms of hours how much difference it could have made there. If you are getting in at 12:44, let's say, let it be even 12:45, okay? Somewhere right there. Yeah, let it be 12:45, okay? If you get in at 12:45, your stop loss is 22.45, stop loss 22.38. You have 7 cents stop loss. 7 cents stop loss, you partial at 22.75, that's around 30 cents reward. That's around 4 point something R reward, right? Now look at this. You are getting in at 22.52. Your stop loss is at 22.40, let's assume, or 38. You have 14 cents stop loss, right? And right here at 75, you are getting only 2 R profit. You see how the entry matters? Because of just a few cents later entry, you're having a wider stop loss with the same target. You're having smaller targets. So you have 2 R trade instead of 4 R, 2 R winner instead of 4 R winner, only because you missed by 5 or 6 cents entry. You can't move your stop loss when you are entering late. I mean, why stop loss at the low of the previous candle rather than the wick? It was not a breakout. No, it wasn't really clear breakout right here. It wasn't holding a flat area right there. It was so close to the next pivot point right here. And I love to see these kind of pullbacks when it's doing this. And then it's holding a flat top right there. And then it's breaking out above it. Chris, what did you do there? Yeah, I wouldn't have taken this long definitely as at all. Same thing, like let's go just quickly through this one. This is the high of the day, broke the high of the day, not so strong after breaking the high of the day, getting back into the range. And once the stock gets back into the range, this is a weak sign. I assume that it will just make a higher low, a lower high, head and shoulder setup, which it did, and then it just sells off. So yeah, I wouldn't really take this thing to the long side there. Daniel, let's see, Cisco and BA. Let's go through BA first. This was a short setup. Looking at the 5-minute chart, it was downtrending, pulled back to the 9-moving average or VWAP, and then you took it after this reverse hammer right there to the short side for a reverse ABCD pattern. This wasn't bad. One thing I don't like is again this right here. It did a small pullback right there, small reverse ABCD, broke the low of the day, wasn't weak enough, and started coming back up. So it is not the best, but it's still not the worst. I sometimes take similar setup to this one. It's not the best, but it's still good. It is a reverse ABCD pattern. It did a new 5-minute low. It did a new 1-minute low. It did a decent pullback around 30 or 40% of the move right there. But unfortunately, it just failed and started coming back up right there. So yeah, this wasn't bad. It just didn't work out. Cisco, I'm not sure what this was, a long or a short. Now, I have a friend who called Cisco to the long side when it was doing like this, and I told him I don't really like it around there. Why is that? Look at the 5-minute chart. It was uptrending. Yes, it started flagging and it started forming an ABCD pattern. But remember my ABCD lesson webinar? If the stock is consolidating above the 9-moving average in the 5-minute chart, and there is a gap between the entry and the 9-moving average in the 5-minute chart, I don't take it for an ABCD pattern, even if it looks good on the 1-minute chart. Why don't I do that? And I mentioned it in the webinar. I don't do that because, first of all, stocks usually tend to pull back to the 9-moving average in the 5-minute chart. And second of all, even if it works out and it breaks, and it did break right here, you could see that it did break the high of the day by a few pennies. I'm not sure how much it's going to run. Will it give me the risk to reward I want to have if I get in right there? So those two reasons preventing me from taking these kind of ABCD patterns. So the reason is it extended from the 9-moving average and the 5-minute chart. If by any means I decide to take the stock to the long side when it's extended from the 9-moving average and the 5-minute chart, I put my stop loss at the 9 and the 5. But then the risk to reward is just messed up. But that happens only if I'm really confident with the trade and I believe that it will run without me but I don't really remember when the last time I did that. I usually just avoid them. Now here it dropped down to the 9 moving average on the 5 minute chart. It held it here. You could see small double bottom on the 1 minute chart. Held the 9 moving average on the 5 minute chart for 5 minutes, 10 minutes, 15 minutes, new high. This was a really good entry right there. So I would have taken this entry right here if I was long biased on this thing with the stop loss below the C. This is just a little bit late, but even if I take this entry to the long side, my stop loss would be either here or here. I'm not sure if it worked out or no, but this setup, if it fails, it's totally fine. It wasn't a bad setup, it was good. This setup was just a little bit early. Nagraj, I recommend you go through your journals. You do have a journal, right? And you have screenshots of your trades. Go only through those type of trades, the trades which are extended from the 9 moving average in the 5 minute chart, and you try to long them. Check the risk to reward, see how many of them worked and how many of them failed. And I bet I don't even need to look at them all. You will see that most of them failed. It's because I have some members I'm talking to who are sending me their trades. We go through those trades and they do fail a lot. I myself was taking these type of trades. I went through my journal and they are failing more than they are working. And I bet if you go through your journal and you check these type of trades here, you will see that they are failing more than they are working. And since they are failing more than they are working, why would we even try to catch a winner on this one? Why would we go and try to catch something which is giving us 30 or 20% win rate? It's not really worth it, right? And even if it gives us 50 or 60% win rate, check the win rate. I mean, if you are tending to take weak scalps, check the risk to reward. Does it really worth taking these type of trades for a risk to reward? And just continue looking at it and watch what it's done after the pullback. Would it have been better to wait for the pullback or no? Eventually we will come to this point that it's usually better to wait for it to get to the 9 or at least get closer to the 9, and you'll just be waiting for that. It's easy to give you some rules and tell you just follow them, but following rules without statistics is tough. You need statistics which are telling you or proving to you that doing something is better than something else. Once you have those statistics, you will follow the rules easily. I can't determine exactly when they are extended. Just check it by view. When they are extended, you see the gap here, right? It is extended in this case. Just the look of it, it looks like it's far. Looking at it here, it's not so extended. It's close to the 9 and the 5. If it's by few pennies, far from the 9 and the 5, then it's fine. But when it's that far, then it is extended. You don't need to see to calculate it or to see any number, because this distance right here, it will vary from one stock to another. On AAL it could be 6 cents or 7 cents, but 6 cents or 7 cents on AAL is so much. On Tesla it could be $4 or $5. It did look like it's going to break out, and it did look like it's forming sort of an ascending triangle right here, but the 5 wasn't so good. I'd have waited for it to either pull back, and even if this setup breaks out and works out, I will not really regret if it goes without me. Robinson, let's see what you did there. So you see, this is the type of trades which I'm not usually taking. I'm glad that this thing worked out, Robinson. 30-minute open range breakout confirmed by ascending triangle on the 2-minute chart. First, second partial, 1/4 position. Hold the other half for 24.50 level, but sub out break even. So look at this. I'm glad this setup worked out, but this is the type of I'll tell you what you saw there, and yeah, you said it. It's a 30-minute open range breakout. You see sort of a pennant on the 2-minute chart right there. You saw something on the 1-minute chart maybe. You saw a bullish pattern on the 5-minute chart, so you decided to take it to the long side, tightened your stop loss, and it was a winner. But personally, I wouldn't take this setup to the long side. Why is that? Look at the move right here on the 5-minute chart. It's just going straight up. It's going parabolically. You don't know when it's going to pull back. It could pull back right after your entry. It could break out a bit like this and then start pulling back. It could just move a little bit more, or it could just immediately drop right there. Like the move already happened, we missed it, and at this place right here, we just wait for it to see what it's going to do. You see it starting forming the first wicks on the 15-minute chart. Again, selling pressure, again selling pressure, again selling pressure. It's starting to form a reversal, then it's a good reversal pattern. But taking it to the long side right there, I don't really like it. I mean, taking this thing to the long side right there. How would I like to take a 30-minute open range breakout? I want to see candles inside the 30-minute chart going up, pulling back, coming back up for a breakout. Then I'm taking it right there for a breakout of the 30-minute chart, 30-minute open range breakout with a good pattern on the 5-minute chart and a good stop loss on the 5-minute chart. Because this, look at this, it did work out here, but a lot of times it will not, because it is already extended. It did already do the move. But it's good that at least you had a tight stop loss and you got your risk to reward from it. Denise, let's see what you did there. I was looking for the breakdown of the open range. I wanted to enter on VWAP, so waited for a pullback. I didn't really have profit target, but did not want to be greedy, so took profit. You're welcome, Robinson. So let's see what you did there. You took Oxy for a 1, 2, 3, not 15-minute open range breakdown. Looks like more like a reverse ABCD pattern. This entry right here, I wouldn't have taken it to the short side. Why is that? High 1, low 1. It's looking weak, right? High 2, that's good. Low 2. I like that. Now it is down trending right there. It looks like it's making lower high, lower high, lower high, lower low right there. And I would expect it to make a third lower low because it made a lower high for a breakout step. That's good. And I like what you saw there, and I like that you waited for a pullback. One thing though, you took it on the way up. You took it when it was coming back up with no confirmation yet. It could have made the next candle higher high and higher low, and then a new low on the next candle. It's still a lower high wave, but with a little bit bigger pullback. This could have got you stopped out. So in this case, I would have waited for it to do this doji or take it on the next 1-minute candle, just to wait for a little bit more confirmation. Then you'll have your stop loss, you'll have a good reward. You took the exit right there, and I like this exit. Why do I like this exit? Look at these guys. What do we have here? Stock which is getting extended from the 9 and the 5, not so extended but decently. There is distance between the stock and the 9. You have climactic volume, and remember what we said, climactic volume is a good sign for reversals. This huge volume right here, a double bottom right there, and look what happens after that. Just a reversal. So this exit right there after this climactic volume, it was smart. I would have done the same thing. Once I see this, I would take 70% of my position out, or sometimes even all out. Then it's coming up, pull back. This would have been a really good entry to the long side. This short I wouldn't have taken. And again, why wouldn't I take it? I have a reversal pattern right there. And now look at this. You have high 1, high 2, high 3, high 4, and it's just making a new highs. It's starting to change the trend. You have this low, and then it's making a higher low. So the trend which was going to the downside changed. It started making higher highs and higher lows after climactic volume. It started to reverse. So yeah, I wouldn't have tried catching this for a short. I would have waited for it to go above view up, break view up, pull back, and then look for a setup to the long side. It's not a bad ascending triangle right there after it broke. View up, this wouldn't have been a bad entry right there. This wouldn't have been a bad entry. Even this wouldn't have been a bad entry right there. Take it to the long side. Yeah, exactly. I see that you tried to catch it on the pullback, but here it wasn't a pullback. This was already trend changing setup. It wasn't continuing the downtrend. It just changed it, right? Perfect. Let's see what you did there. Let's take a look at this, this, and this. You're welcome. So WFC, same thing and same setup, but look at this. This is a good entry. This was an earlier entry. You didn't take it up there. It was 42 or 43. Tighter stop loss, and this would have definitely been a good reward right there. That was a really good partial right there, right at the peak. I love when that happens. Then you took more partial here, and that's smart too. I like this partial as well. It went all the way up there. It pulled back, tried to break up, failed the breakout, and started going down. So yeah, here I would have went most of my position out. Then it's getting back into the range, which is not literally into the range. That's actually not so bad right there, but close to your break even and you exit all. I think I wouldn't have exited this right here for one reason. Yes, it's getting back into the range, but look at this. This is not so far from break even, and this is the last portion, right? I think it's 10% or 20%, or I don't know, 15%. I'm not sure how much was that, but this small move right here with only 10%, it's not even 0.1 R, I assume, right? So what's the difference between letting this last portion, which is giving you literally nothing, not even paying for commissions, at break even, or holding for it in case it holds above your break even and makes a move, and there at least it will give you some profit. So if I tend to hold and I see that it's getting so close to my break even, I just continue holding it to my break even, because I know that taking a partial at 5 or 6 cents profit with only 10% remaining or 5% remaining for my position will not make me money. It's better to just hold it to either break even or hope for a bigger run in case it holds my entry right there. Are you talking about WFC or you're talking about Robinson's trade? Let's see what you did here on AAL. So you try to take it to the short side. Now this is not a bad short. It dropped down, pulled back, dropped back again down. Now I'm not sure I would have taken this thing to the short side for one reason. This is a parabolic pullback. This is a third type of my ABCD patterns, where I wait for a W shape, and I see the W shape here. So this entry I'm not sure I would have taken. It's not bad. Theoretically it's good. It's an ABCD pattern, a reverse ABCD pattern. You took it after it bounced off the C and after it did a new 5-minute low. It's not bad, but according to my rules, I usually wait for a W pattern. This, most probably, if I wasn't at the goal, if I saw this, I would have taken this thing to the short side. I have the M shape right there after a pullback on a reverse ABCD pattern. But this, unfortunately, didn't work out and it got you subbed out. So yeah, I like this setup. This wasn't perfect, but still it was good. Both didn't work out, and if I'd taken this setup and I got subbed out, I wouldn't really be mad about it. It was a good setup, which just simply, unfortunately, didn't work out. I would have exited a little bit earlier here, though. And I see it now. And anyone, could you guys tell me why, if you were here, would exit this trade a little bit earlier? It's the hammer, and what did that hammer do? It is the hammer, exactly, but that hammer also did something else. Remember when we set a new low? Exactly, it set a new low, a long wick with a fake breakdown. So look at this. Usually when price moves, it moves through pivot points. We trade intraday levels. Stock is dropping down, it's holding some sort of level. Right here, you have that low right there. And look at this, sorry about this. Let me just remove this. Then you have this low right here, you see? It just, the price usually moves with intra-day levels. Let me draw this right there. Let me draw this right there. And draw this right there. When I trade, I draw these lines right there. If the price goes into this level, which it bounced before, right here, and it could break it a little bit up, a little bit down, that's fine, I don't really care about that. But if the price goes there and breaks it and starts going down, I would expect it to go at least to the next pivot point, which it held at some area right there. If I see that the stock is going from here all the way down here to the next pivot point and then bounces out of it, I'm still totally fine with it because it made a move to the next point it had and it's bouncing out of it. That's totally fine. If the stock does break the pivot point and it drops below it, but it bounces out of nowhere, there is no level right there, it was a fake breakout and it starts coming back up, this is a bad sign for my trend trade. I would just bail on it because it did a fake breakdown, it did a good setup there, but it did a fake breakdown, started going against me with a hammer. I would just exit at break even. Why is that? Because I expect that after it breaks some pivot point, it should go to the next pivot point we have. If it goes all the way down here and then it does or forms a hammer right there and starts making highs, I wouldn't bail out on this hammer right here. I would expect it to continue pulling back to that previous pivot point, maybe break it a little bit, that's fine, and then continue dropping down to the next point right there. But since it did bounce out of this point right once and it's fine that it broke it by a little bit, pulled back, and it broke it one more time, but on this time after the pullback it wasn't strong enough to or weak enough to go lower, it showed me that it's actually strong and I could bail on it at break even right there. Okay, that's good. INO. Let's see what it did there. So this on the 1 minute chart, it looks good. On the 5 minute chart, it looks good. And this is the trade where I took it to the short side. No, this is not it. I took it a little bit earlier actually. So look at this. It was downtrending even before then. Pulled back, dropped down. We have a horizontal moving average right there. And this is one of the moments where I don't take parabolic reversals. Even if I see it making a new 2 minute high, new 2 minute high somewhere right here when it's a little bit far from the 9 moving average, I wouldn't take this thing as parabolic reversal because usually they pull back and this horizontal moving average acts as a resistance. So it pulls back, breaks it a little bit, closes as a reverse hammer right there, does a reverse ABCD pattern on the 1 minute chart. You go in for the breakout, put stop loss at a new 1 minute high. If you want to be a little bit more safe, you put it at the high of the consolidation and then you partial down there. This was a smart partial and I would have taken this partial right here as well. Why is that? Same thing happened right there. It's doing a fake breakdown with a hammer and then we had a hammer right there. Then you have a new high right there and then it breaks down. This partial I would have taken also for one reason. Why is that? You have the volume, the climactic volume. This is an indicator that the stock is setting up for a reversal. It could reverse up immediately. If it doesn't do that immediately and it does sort of reverse ABCD pattern, I wouldn't take it for a trend continuation. I would just let it go without me, and once it does this fake breakdown, look at this. This is a good pattern for reversal. Climactic volume, right? You try it at a new high right here, but this unfortunately doesn't work out. It will get you stopped out right there, but look what happens after that. It does an engulfing, doji or a hammer, and a new high. Climactic volume, which is a reversal, fake breakdown right there with an engulfing, sort of a doji or a hammer. I am making the chart looking horrible, I'm sorry about that. Then a new high, take it to the long side there, put your stop loss either here, maximum here, but I think I would put it here, never using the fake breakdowns as my stop losses, and it's making a decent move right there. Last exit, yes, last exit was a little bit late. It was that fake breakdown, and after that fake breakdown, it would have been good to take your exit. But it wasn't too late, it was a little bit, but it was still a good exit there. You held on nice to that trade. So then we're having Colton. Let's see what you did there. CCL 2 times to the short side. Now this trade, I like it. You're having a 5-minute open range breakdown with a descending triangle on the 1 minute chart. You take it for the breakdown. You take some partials, a little bit early partials, but not so bad. Exit the rest at break even. Same thing. Reverse hammer, and we did review this trade before. I'm not sure, I think it was AL or NCLH, but it was literally the same trade. Reverse hammer right there. You get into the short side at a new low, and then there it is. You take the partials all the way down there. This, I wouldn't have taken it to the short side. Why is that? It is far from the 9 moving average in the 5-minute chart. You see where you took it to the short side? When I see stock dropping down, even if it does a reverse ABCD pattern on the 1-minute chart, I wouldn't take it to the short side because it's far from the 9 and the 5. I want to see it getting into the 5, bouncing of the 9 on the 5-minute chart, making new lows. If you took that entry to the short side here, and you did, I see right there, this wasn't a bad trade right there. At 9:15, this was just a little bit early to take it to the short side. When I'm long, I tend to bail on the pullbacks, and sometimes the stock takes off. Can you offer some advice when to stay and when to exit? Yeah, exactly. That's what what we were actually talking about. Draw some pivot points. Look at intraday levels. The stock never goes straight up, right? The stock goes in waves, right? And sometimes those waves vary. The first wave, let's say you took an entry right here. Stock is going up. It's making small pullbacks. And you would survive small pullbacks, right? If you see small pullbacks, you don't care about them a lot sometimes. Sometimes you do care. I don't know if you are really anxious about the trade, but sometimes it could go a lot and then it could make small pullback, which I don't really care about. It goes up, and then look at this. This, if it was on the 1-minute chart, this small pullback, and it's starting to drop back down, and my entry is there, and I'm having 10% or 15% left of my position. If I have some target which looks reasonable up there and this starts to drop here, I wouldn't assume that this is a reversal. I see that the pivot point is right here. I would hold on to this trade all the way to this pivot point. If it bounces out of this trade, my entry is right there. I could double my position, and that's for trend trading. Why is trend trading so good? Trend trading is good because you can scale in with the trade, with the waves, right? With the pivot points. So it's making a new bounce of that pivot point right there. I would add, make my average somewhere right here so that if I lose, I don't lose a lot. I just lose the unrealized money. Or if you're aggressive, just double or triple your position so that you lose 1 R in case it goes there. Then it's going back up. Never add on the way up. It's pulling back down. Higher low wave. Coming back up. I like it, no problem. Might add, might not add. It depends on what I see there. It's getting into a daily level. Starting to drop down, and I don't care about this drop right here. No reason. You could take partial at the new lows, that's fine, but I'm not exiting all out. Now it's getting into the next pivot point we have, the intraday level right there. If it bounces out of it, still hold on to it. If it gets into the range, now this is bad. It's showing you weakness. It didn't bounce off the previous resistance, and if you want to hold on to this one, you are hopeful, that's fine, but I would just start taking partials right here once it gets back into the range. And the worst thing is seeing it making a lower high. Why is that? Because now you're having a head and shoulders setup. Head, shoulders. See, it was strong, and the head and shoulders setup it's getting back into the range. You see, this is the first sign of weakness. It's making a lower high wave. Second sign of weakness, and it's breaking the neckline, which is the confirmation for the breakdown. That's where it's just starting to form another setup, and the trend literally changes. So yeah, basically just draw intraday levels and try to read them. Eric, my question is about exiting on the green candle. Would that have been good time to add instead of exiting, or would have been reasonable? Let's see on this trade, right, Eric? Okay, let's see now. Dal, it's dropping down, pulled back. You took it to the short side for reverse ABCD pattern. It did similar thing to what CCL did. Took it to the short side, partial, and you exited the rest here. So look at it. As we said, what's the intraday level we have? That's it, the intraday level. And you had it drawn actually. You see, it is drawn right there. You could draw one more there. So if it gives you 2 hours here, not bad partial. It's breaking the low of the day now. Now this is where, if we are good traders, we should not take any partials at, because this is where the breakout happens. This is where the trend actually starts. It's making lower lows and lower highs. We don't care about it. We don't take any partials. We just wait, right? Then it's making the first new 5-minute high or 30-minute high if you are trading of that 30-minute candle. 30 minutes, 1 minute candle. Okay. The 1 minute candle. Now it's making the first new 1 minute high. Now this is a good place not to exit all out, only to take partial. Where would I exit all out? That's the pivot point we have there. If it goes all the way to that pivot point and breaks it, that will be my all out signal. As long as it's making lower lows and lower highs, we should hold on to trade. Once it makes new highs, that's where we take our big partial out. 60%, 50%, depending on how much unrealized you have right there. 5 hours, 6 hours, just depending on the unrealized, you take your partial. So as long as it's making lower highs and lower lows, you just hold on to trade. Once it makes a higher low, you just take your partial and continue holding on to it, because the higher low doesn't mean that the stock will just reverse, right? The market isn't going straight down. Market is trading in waves. It's normal to see those new 1 minute highs, and especially here it didn't even break the 9 moving average in the 1 minute chart, which it could break, but as long as it didn't even break the 9 on the 1 minute chart, there is nothing to worry about. There was no reason to exit all out there, especially that you have taken some partials before. Okay, this is the last trade we are going through because we are out of time there. And D-Dog, you took this thing to the short side, 15-minute open range breakdown, and not literally 15, it's actually, so look at this entry to the short side, not so bad. 1 2 3 4 5, yeah, this is a 5-minute open range breakdown, sort of reverse ABCD pattern on the 1 minute chart, making new lows. You have your tight stop loss, took some partial, exited the rest at break even. This entry right here, I wouldn't have taken it to the short side because those candles are just choppy. It's making an engulfing after an engulfing, engulfing after engulfing. It just has no pattern right there. Now here it's getting a little bit interesting. You have two dojis. Doji is an indecision candle, not the winners, not the sellers won, right? Then it's making a new 1 minute low. It's finally making lower highs on the 1 minute chart. You could take it to the short side here, put your stop loss right there, and partial at the low of the day, partial at the break of the low of the day, and then just hold on to the rest of their position. This short, I wouldn't have taken it definitely as well. Why is that? Look what you have on the 15-minute chart. You have a doji, indecision candle. It's not so weak. It broke the low of the day, but it didn't run much after it broke the low of the day. It did break the low of the day right there, but it didn't run much after it broke the low of the day. It just a little bit choppy. And I see that you are a little bit short buys on it. You're trying to catch a lot of shorts on it. Even though, look at this. This is the first high, the first low. Second high, second low, right? Third high. You're taking it to the short side here. It's not so bad on the 1 minute chart. The 5-minute chart, look at it, what you're having right there. It's just a reverse hammer after an engulfing, after a hammer right there. Broke the low of the day with nothing, right? Fake breakdown right there. This chart is just a little bit choppy. It's better to wait for a real step. And I'll tell you, like, this entry, it wasn't bad. It was good. This entry right there, it was good. This one, unnecessary. This one right there, unnecessary. This one right here, it's starting to change the trend, literally unnecessary. Now looking at the 15-minute chart, drop down, pull back on the 15-minute chart, reverse ABCD pattern. If you take it to the short side right there, it's not so bad. So basically looking at this whole chop right there, I would like only 1 entry, 2 entries, and 3 entries. If you try to take some reversals here, it wouldn't have been so bad, not so ready. trying right here, it wouldn't be so bad. But yeah, a little bit so much trades. What I think is that you're trying to catch or be in every move right there. Don't worry about missing a move. You should have your playbook, have your setup. If you see that your setup or your strategy is starting to form out, then execute the trade. If you feel that the stock will go without you and you want to be in it because you're afraid it will go without you, but that's not your setup, just let it go. The market is open for around 7 hours a day, right? If you miss one move here, you'll catch another move there. So yeah, that's it for today, guys. I hope you did have a good trading day. If you still have any questions, you could always email me. Thank you guys on YouTube for staying there with us. Enric, it's not only for beginners. We review the trades for different members. We look at it all together. There is something to learn all the time for everyone. Even me doing those trade reviews, I'm always learning from our members' trades. So no, it's not only for beginners. You're welcome, everyone, and have a good day.